contrarian, leave it to contrarian badass Reggie Middleton. He called the housing crash. He called the collapse of Bear Stearns and Lehman Brothers and the crisis in the Eurozone banking system.
Reggie Middleton.
To Reggie Middleton of BoomBustBlog.com. Reggie, welcome back.
Well, thank you. Good to be back as usual.
All right, so we're talking about Trump-onomics, effectively, and how this will impact the stock market and trade. And we were talking about Apple Computers, an interesting case study, because here's a company that obeys your law of economics, which states that labor goes where it's cheapest, capital goes where it's treated best. Here you have Apple Computer. They keep their money offshore because it's treated better. In other words, it gets lower taxed. And they have their labor in China, and they get the best of all possible worlds. And my point was, well, Trump can come in and lean on Apple and say, look, bring the jobs back, or we're going to put a tariff on these products that you're exporting back into the U.S. from China. And your point was that, well, this would not be the case historically in terms of the capital coming back. What doesn't, from history, we see that it doesn't create jobs, essentially. Okay, so then brings me to my question about industrial policy. So the government can step in and start to implement industrial policy. The government, therefore, is overriding the machinations of free markets, and they're imposing their policy. And Trump, I believe, is leaning in that direction. What do you think?
Well, if you look at the last tax holiday, if I'm not mistaken, there was a moratorium on dividends and financial machinations, etc. It didn't work. But let's take a Goldilocks perspective. Let's say everything goes as you initially suggested. Trump issues tariffs or threatens to issue tariffs if they don't bring jobs back and repatriate their money. So they bring jobs back, okay? That increases net costs of the iPhone, which is very popular, especially in metropolitan areas, New York, Miami, LA, etc. Say 30%, okay? Apple has about 61%, 60% margin on iPhone. They can afford it from a business perspective, okay? The S&P 500 can't afford it. You chop Apple's margins in half. That means theoretically the iPhone is, 75 to 90% of their profits. That means you chop the Apple share price by roughly 48%. Apple share price gets chopped by 48%. There goes, Black Friday all over again. That drags down.
Okay, but 80% of the stocks in America are owned by 10% of the population. And Trump supporters in Wisconsin and the industrial states and the Rust states, they don't own stocks. They don't care. If the stock market dropped 50, 60, 70%, they don't care. If they get an incremental raise in their wages, if they're getting jobs, they care. They're going to like that.
Okay, so we'll run through the scenario. Okay, they do own stocks, they just don't control it. So they get an incremental increase in wages, 1, 2, 3%. Okay, their pensions get whacked totally. So 3% increase in wages, 48% decrease in pensions.
But they've already had their pensions whacked over the past 20 years through the process of financial repression, of lowering interest rates artificially. And we've seen this happening in big pension funds like CalPERS and others that are now having to declare huge write-offs and write-downs, and they're going bankrupt because the government under Ben Bernanke, the Clintons, and then under Bush and under Obama,
everybody
confiscated hundreds of billions, trillions of dollars through artificially low interest rates. They've already had their pensions destroyed. They're already being destroyed. They don't see that as a risk.
Okay. They may not see it as a risk, but when you turn 65 and it's time to start drawing money,
they're not going to get that money anyway because it's already been destroyed.
Some of them will get their money. The way the pensions work, the actuarial system is not first in, it's first in, first out. So unfortunately, when you start draining it, it's going to turn into life or last in, first out because you just don't have the opportunity to pay it off. If you had a 40% drop in S&P, you have to understand a lot of the pensions are in trouble anyway because of the way they're underwritten actuarially. They assume 7% constant return.
Okay, so you're talking about, let's say, a man-made S&P collapse versus a spontaneous S&P collapse. which you were speaking about earlier, is what we're going to look forward to anyway, because the stocks are stretched and valuations are unsustainable.
Right.
So we're looking for a market collapse. Either it's a spontaneous combustion due to extended valuations and interest rates are upticking after a 30-year bull market in bonds, versus a man-made collapse in stocks brought on by industrial policy that backfires. But either way, the market's overvalued.
Yeah, it's overvalued. Let me explain this. Think of velocity. You know, I could get, my hand gets hurt that hard, that hurts. Or that hard, it hurts more. That hard if you do the Apple, 50% valuation, okay? Or it still hurts, just to a lesser extent, if you go the other way, which is the return of fundamentals when interest rates go up. I wrote a couple of articles that basically said when interest rates go up and capital has a real cost, then you get to see who's truly swimming around naked as
you're slapping yourself like that for a moment. I remember I've seen videos of you fighting.
Yes.
And you're a trained fighter.
Yeah.
And I notice you're extremely fast. Even though how old are you?
Almost 50, 49.
Okay, but you're still wicked fast.
I think I am.
I think now I'm going to put my hands up and demonstrate to the audience how fast you are with some mock fighting. Just do some. Don't try not to kill me.
All I'll do is touch your hand, right?
Yeah, but do it really fast. Show the audience how
fast, right?
Dude, you said I was super fast. Super fast. Get a flurry going. Whole
Get a flurry going? But I'm afraid I might hit you though. I could go fast, so I'm pretty fast. This is one thing in technique, and this is an explanation I was doing in terms of research, right? You can play games that hit, but I've been fighting since, I think it was like 13 years old.
Yeah.
There's one way to hit you could play, but when you truly hit, you commit. You put your whole body in.
Right.
And then you try and do true damage. So if
I've seen you with your shirt off.
Right.
The guy is ripped.
See,
Okay? It's not like Obama. It's not like Putin, though. I mean...
This goes to point. If I was going to hit Max, right, I don't try and hit his chest. My attempt is to take his spine out, and his chest is in the way. So if I hit him, go all the way through.
Yeah.
Same thing when you do strategy, financial analysis. If I'm going to go after somebody, if I'm going to go after the U.S., if I'm going to attempt to short a company, and I want to make it work, I don't just swing my hand. I go full all the way through. So, if I'm looking to capitalize on shorting, let's say, Apple, first thing I do is I come up with a thesis, okay? I decide if it's, if thesis holds water, and then I publicize it, okay? I think that is the impetus behind a lot of Trump's marketing. Trump does a very, very good job at selling and negotiating a deal. Very good job. But if you look historically, he's a very bad operator. Every time he's tried to operate a business, or most of the times, many times, it's ended up with bankruptcy, where there's sports teams, airlines, hotels, etc. He is excellent at selling and excellent at negotiating a deal. And that's
but he's also good at bankruptcy court. Okay? He got his new Secretary of Commerce bailed him out in the early 90s and engineered that huge tax loss carry forward. He didn't have to pay taxes for 20 years.
Well, he obeyed the laws as they were on the books.
That's right. I mean,
that's what he did.
But the U.S. is technically bankrupt. Is the U.S. technically bankrupt with 20 trillion in debt, et cetera?
Well, it's hard. See, this is not personal finance. So the U.S. may be technically bankrupt from a personal financial perspective, but the U.S. is the world's #1 military power, the world's #1 geopolitical power, and we have more capital at hand, economic capital, than any other nation in the world. So we could go bankrupt, we could be bankrupt. It's not like I went bankrupt or you went bankrupt. The U.S. has a lot. Okay,
so the U.S. dollar, they say, is a currency backed by the Pentagon, essentially.
Right.
That people have to use the dollar or we bomb you. That's been the strategy.
That's the reserve currency strategy since the beginning of time. The reserve currency before the U.S. dollar was, I think, the pound? The pound had the largest military, and if you disagree with them, you all know what happened. Take a look. Before the pound, the reserve dollar basically means he who has the largest gun.
Right. And in response to that, recently there's been the rise of Bitcoin, which is a different model. And you've been a huge advocate of the cryptocurrency space, blockchain, Bitcoin.
Still am.
And Bitcoin's ended 2016 on a big rally, big year. Where do you see this, 2017 for Bitcoin?
I think it'll still go up. It's had a rough last couple of days, but of course, for some reason, many people who opine on Bitcoin, A, don't know what Bitcoin is, and B, they don't have the hand on all the correct levers. You have to have a global...
But beyond the technical and the price action, could it develop into a reserve currency where central banks are buying Bitcoin as a store of value?
I don't think as a reserve currency, but it can develop into asset or commodity that central banks will buy into.
Is it a commodity or is it a currency?
Well, see, trying to pigeonhole it into a label is not going to work. That's like when the internet first came in. Is the internet a commodity, or is it a network, or is it an asset? It's something different. You know, it has aspects of each and every one of those buckets, and it has an advantage that individual commodities or assets that are previously put in those buckets didn't have. For instance, Bitcoin is programmable. It has its own transportation rails, so it doesn't have to rely on a third party. It's immutable, so it cannot be altered from the outside. So, you know, putting legacy labels on a brand new technology is the wrong way to look at it. You can do it, but you're going to be inaccurate, and there's really no use to do it if you want to know the truth.
Let me ask you a question about Jack Ma. He runs Alibaba. They compete with Amazon effectively.
Right.
During the election, it seemed like Donald Trump was picking a fight with Jeff Bezos over at Amazon. And you know, they picked up the Washington Post.
Right.
And your observation is what exactly when you see Trump bringing in Jack Ma into the office, and is he trying to pressure? What's going on? Is there a little cronyism going on there? What's going on?
Well, there's several ways to look at it. From a geopolitical, strategic perspective, he is trying to threaten China. And one way to do that, outside of feigning or actually opening diplomatic ties with Taiwan, would be to take the capitalistic pursuits, the entrepreneurial pursuits of small businesses and small businessmen, and make them real. By bringing Jack Ma over here, he does that. That's a big plus for Trump. On the negative side, why in the world would you empower a foreign company and one of your biggest economic competitors that you ran your whole campaign on versus doing it with one of the local companies? So he's gonna give Jack Ma 1 million new businesses versus giving Amazon the same opportunity in China, where they have a much smaller footprint. That's almost unpatriotic. So,
but he might do it out of spite.
Doing out of spite does not make a good president, now does it? But, you know, I wouldn't put it past him. I do understand that Jeff Bezos owns the Washington Post. Washington Post has been very rough on Trump, but I think a good president can separate his personal issues, particularly, hopefully in public, from his duty as police.
You would think so.
You would think so.
We'll see. Reggie, thanks so much for being on.
Well, thank you. You're welcome.
All right, well, that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I'd like to thank our guest, Reggie Middleton of BoomBustBlog.com. You can reach us on Twitter at Kaiser Report. Until next time, bye, y'all.